Congress is actively moving on a major Social Security benefit increase right now, and the overwhelming majority of recipients have absolutely no idea it is happening. What if your Social Security check grew by more than $200 every single month, starting as early as next year? Not because of a routine cost of living adjustment, not because of standard inflation indexing, but because Congress is right now advancing legislation that would fundamentally restructure how Social Security benefits are calculated and distributed to millions of Americans currently receiving them. Here is what should concern every person collecting Social Security benefits today. This is not a rumor circulating on social media. This is not speculation pulled from a partisan political blog or an ideologically motivated news source. These are real pieces of legislation with real bill numbers that have already passed through real congressional committees with genuine bipartisan support behind them. And the overwhelming majority of Social Security recipients across this country have no idea any of this is occurring. Why does that matter so much? Because the outcome of these legislative conversations will directly determine how much money deposits into your bank account every single month going forward. It will determine whether you can cover your grocery bill without being forced to choose between food and prescription medications. It will determine whether your retirement budget can absorb the rising cost of housing and the increasing burden of utility bills that keep climbing every season. It will determine whether millions of retired teachers, firefighters, police officers, and government employees finally receive the complete benefits they spent entire careers earning and faithfully contributing to. And yet, the people whose daily lives will be most immediately and directly affected by these decisions are, in most cases, hearing about them for the very first time right here. This guide breaks down every major Social Security legislative proposal currently advancing through Congress. It explains precisely who stands to benefit from each proposal and by exactly how much. It examines the funding pressures that make action not merely politically attractive, but mathematically necessary. And it tells you exactly what steps to take right now to protect your benefit situation, regardless of which specific legislative path Congress ultimately travels. Every piece of information here comes directly from publicly available congressional records, Social Security Administration reports, and official legislative documentation. Nothing is exaggerated, speculated, or politically spun. Just the facts, explained clearly so you can make genuinely informed decisions about your own financial future. Why Congress is seriously discussing a major benefit increase right now. To understand why Social Security expansion legislation is gaining real and sustained momentum in Congress at this particular moment, you need to understand the financial reality that tens of millions of American retirees are navigating every single day, because that reality has become impossible to ignore. The average monthly Social Security retirement benefit in the United States currently sits at approximately $1,900 per month. For roughly half of all retired Americans, that Social Security income represents more than 50% of their total monthly household income. For approximately 1 in 4 retired Americans, Social Security represents 90% or more of every dollar they receive each month. Now consider what has happened to the cost of living for those same people over the past several years. Grocery prices have increased dramatically. Housing costs, including both rental expenses and home ownership costs, have surged in virtually every region of the country. Prescription medication prices continue rising without pause. Utility bills have climbed substantially. Transportation costs, including vehicle maintenance, fuel prices, and public transit fares, have all increased significantly. The Social Security cost of living adjustments applied in recent years, while historically significant in percentage terms, have simply not kept pace with the actual experienced inflation of retired households, whose spending patterns differ meaningfully from the general population, indices the government uses to calculate COLA adjustments. Retired Americans spend proportionally more of their incomes on healthcare, housing, and food than the general working population does. The standard inflation measures used to calculate Social Security adjustments do not fully or accurately capture this reality of senior spending. The result is a gap a real, measurable, financially painful gap between what Social Security benefits currently provide and what retired Americans actually require to cover basic living expenses with basic dignity. Congress is well aware of this gap. More importantly, Congress is acutely aware that Social Security recipients represent one of the most consistent and dependable voting blocs in American democracy. Seniors vote. They vote in primary elections and general elections. They show up in midterm elections when overall participation drops significantly across other demographic groups. They are engaged, well-informed, and deeply motivated by issues that directly affect their financial security and their daily lives. That political reality, combined with the genuine and growing economic hardship that millions of recipients are experiencing every month, is driving serious and sustained legislative attention towards Social Security benefit expansion right now. Multiple bills are advancing simultaneously through different congressional pathways. Some have already cleared meaningful legislative hurdles. The convergence of genuine economic need, strong political motivation, and specific policy proposals with measurable bipartisan support creates conditions where real legislative action is more likely than at any comparable point in recent memory. The Social Security Expansion Act, what it proposes, and who it would help. The Social Security Expansion Act represents one of the most substantial and consequential proposals for increasing Social Security benefits currently under active congressional consideration. The central provision of this legislation would increase monthly Social Security benefits by approximately $200 per month for the majority of current and future recipients. For a retired individual currently receiving the average monthly benefit, that represents an increase of more than 10% in monthly income. For married couples where both partners receive Social Security benefits, the combined household increase would exceed $400 every month. To make that concrete, $200 in additional monthly income represents $2,400 per year for a retired individual living on Social Security. For someone managing a genuinely tight retirement budget, that amount covers several months of grocery bills. It covers a substantial portion of annual prescription medication costs. It covers utility expenses for multiple months. It enables small but real financial breathing room that millions of Americans currently do not have. This is not a symbolic political gesture. It is a meaningful and material improvement in financial security for people who are genuinely struggling right now to make ends meet on fixed incomes. Beyond the immediate benefit increase, the Social Security Expansion Act also proposes a fundamental update to the formula used to calculate cost of living adjustments going forward. The current COLA calculation relies on what is called the Consumer Price Index for urban wage earners and clerical workers, commonly abbreviated as the CPI-W. Critics of this formula have argued for years, with considerable justification, that this particular index does not accurately reflect the actual spending patterns of retired households. The proposed replacement is the Consumer Price Index for the elderly, known as the CPI-E. This index specifically tracks price changes in the categories of goods and services that retired Americans actually purchase, including healthcare costs, housing expenses specific to retirees, and other budget categories that carry significantly more weight in senior households than in the budgets of working-age families. If the CPIE were adopted for Social Security COLA calculations, independent analysts project that annual benefit adjustments would be modestly but consistently higher than under the current formula. Over a retirement spanning 20 or more years, that consistent difference accumulates into a meaningfully higher lifetime total benefit received. How does the legislation propose to pay for these expanded benefits? The primary funding mechanism involves adjusting the Social Security payroll tax contribution structure for higher income earners specifically. Under current law, the Social Security payroll tax applies only to earned income up to a specific annual threshold, one that is adjusted upward each year, but still leaves a substantial portion of high earners' income entirely untaxed for Social Security purposes. Income above that cap is not subject to any Social Security payroll tax contributions whatsoever. The proposed adjustment would require payroll tax contributions on earned income above $250,000 annually. This means individuals earning significantly above the current taxable maximum would contribute to Social Security on their full earned income, exactly as working class and middle class Americans already do on every single dollar they earn throughout their careers. Advocates of this funding structure argue it corrects a fundamental structural inequity in the current system while simultaneously strengthening the program's long-term financial foundation. The broader policy debate around this mechanism involves legitimate disagreements about tax structure, economic incentives, and distributional effects that extend beyond what this guide addresses. What matters most for recipients is understanding that a specific, detailed, and fiscally substantive funding proposal exists, and that this gives the overall legislation a level of credibility that pure benefit expansion proposals lacking funding mechanisms simply do not possess. The Social Security Fairness Act, critical information for public sector retirees. If you spent your working career as a teacher, a firefighter, a police officer, a government administrator, a public university employee, a state or local government worker, or in any other public sector role, this section contains information that could directly affect your monthly income by hundreds of dollars. Please read it carefully. The Social Security Fairness Act takes direct aim at two specific provisions of current Social Security law that have reduced or entirely eliminated Social Security benefits for millions of public sector retirees for decades. These two provisions are called the Windfall Elimination Provision and the Government Pension Offset. Understanding what each one actually does requires a brief but important explanation. The Windfall Elimination Provision affects Social Security recipients who also receive pension income from employment that was not covered by Social Security payroll taxes. Many public sector positions, particularly in state and local government, operate under separate pension systems rather than contributing to the Social Security system. When workers in these positions also have Social Security work history from private sector employment, the Windfall Elimination Provision reduces their Social Security benefit using a modified and less generous calculation formula. The practical result is that public sector retirees with mixed work histories, some years in covered employment and some years in non-covered public service, receive a lower Social Security benefit than the standard formula would otherwise produce. For many affected retirees, this monthly reduction amounts to several $100s in permanently lost income every single month for the rest of their lives. The government pension offset operates differently but causes equal or greater harm for many recipients. Under current law, if you receive a pension from government employment that was not covered by Social Security, your Social Security spousal benefit or survivor benefit is reduced by 2/3 of your government pension amount. For many affected individuals, this calculation eliminates the spousal or survivor benefit entirely, reducing it to zero. Consider the concrete human impact of this provision. A widow whose late husband spent his entire career in the private sector, paying into Social Security faithfully with every paycheck, might reasonably and understandably expect to receive a meaningful survivor benefit. But if she herself spent her career as a public school teacher and receives a teacher's pension, the government pension offset can reduce her survivor benefit by an amount equal to 2/3 of that pension, potentially wiping out the survivor benefit completely and leaving her with nothing from a system her husband contributed to throughout his working life. Critics of both provisions have argued for decades, with considerable moral and economic force, that they unfairly and disproportionately penalize workers who chose public service careers, often at salaries below equivalent private sector positions, in exchange for the promise of pension security in retirement. These workers made long-term career decisions based on specific understandings of the retirement benefits they would receive, only to discover that Social Security rules would significantly diminish their total retirement income in ways they were never adequately warned about at the time of their career choices. The Social Security Fairness Act would eliminate both the windfall elimination provision and the government pension offset completely and permanently. For affected retirees, the resulting monthly benefit increase could range from modest amounts to several $100s per month, depending on individual work histories and specific pension amounts involved. For some recipients, particularly those currently receiving zero Social Security, spousal, or survivor benefits solely because of the government pension offset. The change would restore benefits that were effectively stripped away entirely despite years of contributions through a spouse or family member. This legislation has already achieved significant milestones in moving through the legislative process. The breadth of support it has attracted from members of both major political parties directly reflects the wide geographic and demographic reach of the affected population. Public sector retirees exist in every congressional district in every state across the country. Their families, their communities, and their organized advocacy groups represent a politically meaningful constituency that legislators from both parties clearly recognize and respond to. The Social Security Funding Challenge: what every recipient must understand. Any honest and genuinely complete discussion of Social Security benefit expansion must include a clear and straightforward explanation of the program's current financial condition. Understanding this funding reality does not weaken the case for benefit increases. It actually strengthens the argument for comprehensive legislative action that addresses both benefit levels and long-term program sustainability together, because the two problems are deeply connected. The Social Security Board of Trustees publishes a comprehensive annual report projecting the program's financial condition across a 75-year horizon. The most recent trustees report projects that the combined Social Security Trust Fund reserves will be depleted within approximately the next decade if Congress takes no meaningful action to address the program's structural funding gap. It is critically important to understand what trust fund depletion actually means, and equally important to understand what it does not mean. Trust fund depletion does not mean Social Security stops paying benefits entirely. The program would continue receiving ongoing payroll tax revenue from current workers. That ongoing revenue stream would be sufficient to cover approximately 75% to 80% of currently scheduled benefits. What trust fund depletion means in practical, real-world terms is this: if Congress takes no action, benefits would face an automatic across-the-board reduction of roughly 20% to 25% at the precise moment the reserves run out. For a retiree currently receiving $1,800 per month, a 20% automatic reduction means losing $360 per month in income permanently, with no transition period and no warning. For someone who depends on Social Security to cover essential living expenses every month, that level of sudden reduction is not a manageable inconvenience. It is a genuine financial emergency. Congress has been aware of this projected funding shortfall for many years. The trustees have reported on it in consistent and increasingly urgent terms. Economists, independent policy analysts, and senior advocacy organizations have discussed it extensively and publicly. And yet, despite all of that awareness, Congress has not enacted comprehensive reform legislation to address it. Why? Because every available solution requires some combination of politically difficult choices. Increasing payroll tax contributions affects current workers and their employers. Adjusting the benefit calculation formula affects future retirees who are already planning around current projections. Modifying the retirement age affects workers who are nearing retirement with specific expectations built into their plans. Each option creates genuine political exposure for the lawmakers who champion it, and politicians are structurally inclined to defer difficult decisions whenever possible. The current legislative environment differs from previous years in one critical and consequential way. The projected depletion timeline has moved close enough to the present that the political cost of continued inaction is beginning to visibly exceed the political cost of any of the available solutions. When the depletion date is projected to be 40 years away, deferral is easy. When it falls within the current decade, the urgency becomes genuinely difficult to ignore for lawmakers who face regular accountability to tens of millions of Social Security recipients who vote in every election. This convergence of factors is precisely why comprehensive reform proposals that pair immediate benefit increases with long-term funding solutions are gaining serious traction simultaneously. The combined political and policy logic of addressing both dimensions together is compelling to thoughtful lawmakers across the full ideological spectrum. What the legislative timeline means for your specific situation. Understanding the proposals themselves is valuable. Understanding how the timing of potential changes might affect your individual Social Security circumstances is essential for making smart decisions. If you are currently receiving Social Security retirement benefits, any increase enacted through legislation would generally apply to your existing benefit going forward from the effective date. The specific effective date would be established by the legislation itself, and whether any retroactive application occurs would depend entirely on the exact language of the enacted law. Staying informed about the legislative timeline and tracking effective dates is therefore important for current recipients who want to plan around potential changes. If you are approaching your Social Security filing date and have not yet claimed benefits, the timing of any legislative changes relative to your planned filing date could carry significance for your planning. In general, financial planning professionals recommend against delaying a filing decision solely based on anticipated legislative outcomes. Since legislative timelines and final outcomes are inherently uncertain, your claiming decision should be grounded primarily in your personal financial situation, your health considerations, and your specific benefit calculation under current rules. For questions about how potential changes might affect your individual filing strategy, working with a qualified financial planner or a Social Security benefits counselor is the appropriate step. If you receive a pension from public sector employment and have been affected by the windfall elimination provision or the government pension offset, you should be actively and consistently tracking the progress of the Social Security Fairness Act through the legislative process. If this legislation is ultimately enacted, you will want to contact the Social Security Administration directly to understand the specific process for having your benefit recalculated under the updated rules, and to understand the timeline for when those adjustments would take effect. If you receive Social Security disability benefits, spousal benefits, or survivor benefits, the proposed legislative changes could affect your situation in ways that differ meaningfully from their impact on retired worker benefits. Each of these benefit categories operates under its own calculation rules and has its own specific relationship to the provisions under legislative consideration. How to stay accurately informed as legislation develops. The Social Security legislative landscape is genuinely dynamic and fast-moving right now. Bills are introduced, amended, merged with other legislation, advanced through committee, and sometimes stalled or redirected on timelines that are inherently difficult to predict from outside the process. Staying accurately informed requires going directly to reliable primary sources rather than depending solely on secondhand summaries, regardless of how trustworthy the secondary source appears. The official website of the United States Congress at congress.gov provides completely free public access to the full text of all introduced legislation, complete committee activity records, official voting records, and real-time bill status tracking. You can search for any bill by its number or by relevant keywords and follow its progress through every stage of the legislative process as it happens. The Social Security Administration's official website at ssa.gov publishes authoritative information about current benefit rules, proposed regulatory changes, and links to relevant legislative activity affecting the program. The SSA also regularly publishes consumer-focused explanations of how proposed changes would affect different categories of recipients, written specifically for general audiences rather than policy specialists. The Social Security Board of Trustees' annual report is publicly available and provides the most authoritative independent assessment of the program's financial health and long-term projections. While the full technical document is detailed, the summary sections are written to be accessible to general readers and form the most reliable available foundation for understanding the funding discussion. Your elected representatives in both the House and Senate maintain offices in Washington and in local districts that can provide constituent services related to Social Security questions. For specific questions about your individual benefit situation, the Social Security Administration's national toll-free number connects you directly with agency representatives who can access your account-specific information in ways that general sources cannot. What you should do right now. 7 concrete steps. Regardless of which specific legislative proposals ultimately advance and in what final form, there are concrete, actionable steps you should take right now to protect and strengthen your Social Security situation. First, Create or log into your personal My Social Security account through the SSA's official website at ssa.gov. This free account gives you complete access to your full earnings history, your projected benefit estimates at different claiming ages, and your current benefit information if you are already receiving payments. Reviewing this information regularly allows you to identify and correct any errors in your earnings record before they permanently affect your calculated benefit. Many people discover significant discrepancies in their earnings history only when they finally check, and corrections become harder to make the longer they remain unaddressed. Second, if you believe you may be affected by the windfall elimination provision or the government pension offset, document your complete work history, including both your Social Security covered employment and your non-covered public sector employment. Understanding precisely how these provisions currently affect your specific benefit gives you a clear, concrete baseline for evaluating the potential personal impact of the Social Security Fairness Act if it passes. Third, review your complete monthly budget with specific and honest attention to the gap between your current Social Security income and your actual monthly expenses. Understanding this gap in concrete dollar terms helps you evaluate the real-world significance of potential benefit increases and helps you make informed decisions about any supplemental income strategies you may need to consider in the interim while legislative outcomes develop. Fourth, stay actively engaged with the legislative process. Track the specific bills discussed in this guide through congress.gov. Contact your elected representatives to share your perspective as a constituent who depends on Social Security. Your voice genuinely matters in this conversation. Engage with reputable senior advocacy organizations that monitor Social Security legislation and provide timely, accurate updates to their members. Fifth, if you have not already done so, familiarize yourself with the claiming age options available to you and the permanent benefit implications of claiming at different ages. Understanding the trade-offs between claiming early at full retirement age and delaying to 70 gives you important context for evaluating how legislative benefit increases might interact with your claiming strategy. Sixth, if you have a spouse, discuss these legislative developments together and consider how various scenarios would affect your combined household benefit picture. Spousal benefit rules, survivor benefit considerations, and the potential elimination of the government pension offset may all be relevant to your joint planning. Seventh, bookmark the SSA's official website and set a calendar reminder to check it monthly for updates. The pace of legislative activity makes regular monitoring more valuable than periodic checking. Final summary, what you need to remember. Congress is actively engaged in the most significant Social Security legislative discussions that have taken place in years. Real bills with genuine bipartisan support are moving through the legislative process right now, not sitting on the sidelines as political talking points. The Social Security Expansion Act proposes an approximately $200 monthly benefit increase for most recipients, funded through adjusted payroll tax contributions on higher earners. The Social Security Fairness Act would permanently eliminate two provisions that have reduced or eliminated Social Security benefits for millions of public sector retirees for decades, provisions that have long been criticized as fundamentally unfair. Long-term solvency reform proposals are advancing in parallel because the program's funding timeline has moved close enough to the present that continued inaction is becoming increasingly untenable for lawmakers facing voter accountability. You paid into this system throughout your working life. You contributed faithfully, paycheck after paycheck, year after year. You earned the right to know exactly what is happening with your benefits. You deserve accurate, complete, unfiltered information about the legislative decisions being made in Washington that will directly determine your monthly income and your retirement security. Stay informed, stay engaged, share this information with every Social Security recipient in your life. Because the more informed the public is, the more accountable Washington must be about the decisions that affect every one of us. This content is provided for general educational and informational purposes only. Social Security laws, regulations, and legislative proposals change frequently and sometimes rapidly. Always consult the Social Security Administration's official resources and qualified financial or legal professionals for guidance specific to your individual situation.